There are some crazy things happening in the world of ETFs, and we're going to talk about all of them today. Most of our news is coming from RoundHill. If you guys are familiar with the channel at all, you know I love the RoundHill funds, QDTE, XDTE, and RDTE. 3 weekly paying, high-yielding dividend ETFs, but they're working on so much more. They have a list of quite a few new weekly dividend ETFs that they've put in. They have a prospectus for them, meaning that they are working on them. They're not 100% going to come to fruition, but there is a high chance that these are going to become the next weekly paying dividend ETFs from RoundHill. And on top of that, we're looking at XPay, which is a targeted 20. This fund, they are saying they are going to target a 20% reoccurring yield on this fund. It's managed. I'm sure the fees are going to be higher. We're going to go over all of these today because it's so insane what RoundHill is doing. And in my opinion, if they can continue to manage their funds so that NAV erosion is not an issue, we will see great things from this company and from these funds. So I'm really excited about today's video. I'm really always pumped when we get more weekly ETFs. And they're not here yet, but they are rumored and they're on their way as of what we've seen with the documentation. So we're going to go over all of that today and more. If you guys like dividend investing, ETFs, any sort of investment stock type stuff, you are in the right place. Don't forget to like the video and show that you like this type of stuff, and it helps me grow the channel, as well as subscribing if you want to get more content, which I really appreciate you guys for doing. We're almost to that 4,000 subscriber mark, which is insane. I can't even believe it. And I'm so grateful to you guys for joining me on this journey and giving me all the information and knowledge that you guys have shared over the past couple of years. So with that being said, let's roll the intro. So I'm going to start, I'm in the prospectus for XPay. That is the ticker of the 20% return. And I'm going to show you guys right here, the investment objective. The fund's primary investment objective is to pay a monthly return of capital distribution to shareholders at an annualized rate of 20%. 20%. The fund's secondary investment objective is to provide exposure to the return of an index composed of U.S. large cap equity securities. So this is on the S&P 500. We've talked about this on the channel over and over again, how well the S&P 500 has been doing. And I own some of the S&P 500. I own SPY. But I am very surprised at the return. It's been doing phenomenally well. And to be writing calls on it and to have a return of 20% is insane. Now, for me, the main important thing with this is I want to see no NAV erosion. I don't want them to outperform. I want them to have 20% return, and I want the stock to trade sideways all the time. I will be watching this one very, very closely. It's a monthly return, which I'm happy with. I love the weeklies, but I'm also very happy with monthlies. And here's the crazy thing. They're saying management fees are only going to be 50%. 0.5%, I should say, because I'm surprised. They have been continuing to grow these management fees, but one of the main things is this is not a weekly payer, it's a monthly payer. So it's a little bit less active from the management standpoint. So, I mean, it's really, really interesting to see what they're doing, how all of these things are continuing to be put out, these ETFs, because people love them. But if this thing can return 20% every single year, I'll own it forever. I would never sell. And you can do drip. And we'll do videos on this one. I'm going to start putting out more content on this one specifically, because if you drip 20% and it trades sideways, which is, again, the goal of this fund is not to make money in the value of the fund. It's to make those dividends and pay them out. But if you are able to make 20% compounded year over year, you will do extremely, extremely well. But that being said, let's jump into the prospectus for the new weekly payers. We're going to dive in and go over each stock, and I'm going to say which one I like, if there are any I don't like, and we're going to cover just kind of a basis of if these do come to the market, how well are they going to perform. So we can see here, this is a tweet from Eric Balchunas, probably butchered that. And this is RoundHill filing for a bunch of weekly covered call ETFs with a few insane ones. But we're going to cover all of them today. We have Apple. They're wanting to do a weekly. Again, these are all weekly. I'm not going to continue to say weekly covered call strategy because they're all weekly. It's the same strategy on all of these. But they want one on Apple. They want one on AMD, which is Advanced Micro Devices, a microchip company. And then we see Amazon on here. Coin, which you guys know Coney has done phenomenally well, especially recently with the Bitcoin run. But a coin ETF that pays weekly is going to be insane. We have Google and Meta, Microsoft, and then we have MSTR. So if you guys are familiar with MSTY, the YieldMax fund, again, similar to Coney from YieldMax, absolutely insane returns, 300 to 400% return in the last like 10 months from that, which has been crazy. And then we see Nvidia and Tesla. Now, some of these I like more than others because when we think about this, again, the point of these is to have consistent growth over time. I'm not looking for a ton of volatility depending on your investment strategy with these. So because they do pay weekly, you may have more volatility on some that are kind of crazy like Coinbase. So when Bitcoin runs and coin runs, you're going to have more volatility on that one. You might get better premiums, but it might be harder in the long run for it to just grow at a typical rate because you're going to have crazy dips and crazy runs. And so I like it a little more consistent, but these weekly ETFs, there is some risk component to them. That's why the profit is there. So what we're going to do, let's jump into we're going to go over all of these charts that for the underlying stocks and talk about them. And I'm going to give you my opinion on if it's going to work well with the weekly strategy, if it's going to work meh. I don't think that the weekly strategy is a very prone to losing strategy, I would say. I think most of the time they can make it work depending on the underlying stock, really. So I think a lot of these are good options. They're not super high risk. And so, yeah, we're going to jump in. Let's start with Apple and talk about a covered call strategy that pays weekly from RoundHill. So we are starting on Fast Graphs. This is one, it's a company. I have an affiliate link if you guys want to support the channel by buying an account with them. It's really good for researching stocks. Not so good for ETFs. Definitely better for stocks and ETFs. But there's some great things on here that I really have been enjoying using. And one thing that I really enjoy is it puts everything in one place, which I struggled with for quite a while. Just finding all my information in one spot. I hate going all over the place. But talking about these next weekly paying dividend ETFs, and I do want to say, there is still a full chance that they decide to scrap any number of these, if not all of them. This is not set in stone just because they filed for them. It gives them the option of putting it forward, which some of these, they may see, oh, this is not going to do as well as we thought. They might try and cut some of the ones that aren't doing as good or just move forward with ones that are doing well. But all that being said, we can start with Apple's stock. So we can see there's a ton of stuff that FastGraph puts on here. I don't want to go all the way to the beginning. I'm going to kind of track from, let's say, 2019 to current. So what we can see is we've seen that it has come under with the PE ratio. It's trailed off slightly, but we're still very overvalued PE-wise, according to like the average, what the typical PE would be. And we see this all the time with tech stocks, Tesla, Nvidia, all of them. The PE ratio is insane because you are pricing in a bunch of differences for what they're going to do. It's not as speculative. It's not how it used to be with businesses where it's just the amount of money they're making, and you look at the PE based off that and go, oh, it's too high or too low. We've seen companies like Tesla trade with the PE in like the hundreds, which would be normally terrible, but it has continued to uptrend despite that. So that's why it's a little bit of a new thing, I would say. But we've seen some good return. Apple has been doing well. They even have a dividend, is this red right here that we can see. And so they pay out a small dividend, 1.3%, all the way down to 7%. It looks like it has been trailing off, which is kind of interesting, but tons of good information on here, all about Apple. And so what I think about this one when it comes to a weekly ETF, I think Apple could do extremely well. And what I mean by that is, like, if we pull it all the way back, let's pull it out years and years and years. We've seen Apple continue to trend upward over and over and over again. And we haven't seen too many crazy swings. Pulling it back down to just the last couple of years, we can see we had a swing where it was 174 and down to 137. And this is all this time during post-pandemic stuff. It's hard to try and imagine the market doing something like that again. A low of 129, and now we're all the way up to 230. So we've gained $100 in price just since 2023, since the beginning of 2023. So in 2 years. So it is going up in value. It's doing really well. And, like their credit rating is A++. We've seen that. The debt to capital, 54%, lower than a lot of companies, and a huge, huge amount. Total enterprise value, $3.48 trillion. I don't remember. No, I think Nvidia is now the largest, but Apple is still a huge company. So would this do well with weekly dividends? I think it would. I think the continuing uptrend would be great. I think with Apple, you still can get, even though it's so big, you might not get quite the implied volatility that you would with the other funds, but there's still some really good potential for this thing, not only to make you consistent dividends, but to uptrend a lot better than some of the other ones too, with the aftermarket trading that we see with these weeklies, because they're all 0 DTE expiration calls. So I think this one does have some good potential. In my opinion, it wouldn't do as well dividend wise. I think it would be more like an XDTE, versus a QDTE. QDTE, higher dividend yield, a little bit higher volatility, or maybe even like RDTE, a lot higher implied volatility, worse return in the long run based off price appreciation. But still, I think there's some crazy potential for Apple, and this is probably one I would consider buying. Let me know in the comments, should I do a full new account with all the weekly dividend ETFs? I don't know. If they start putting all of these out, I don't have the money to put a bunch of money into each and every one of these. It's too much money. I don't know what to do about that, but if you guys want to see me do it, I'm sure I could find a way. So let me know in the comments, and let me know which one of these new ones is your favorite, because there's a ton out there, and I'm really excited for a lot of them. Next, we have AMD, Advanced Micro Devices. This is similar to NVIDIA. I mean, this whole sector has just been going absolutely insane. They work with microchips, so I guess you'd say they're pretty close to NVIDIA, same sector. But you can see PE through the roof. It was barely undervalued, according to Fast Graphs and all the metrics they use. They considered it undervalued when it was below this $88 mark. And now, what are we at now? We're sitting way up at $138. But they are continuing to expect it to trend upward. This is one that I think could do extremely well price appreciation wise. Even, potentially better than like Apple, because you have a lot more room for growth. It's 224, almost $225 billion they have it total enterprise is the market cap plus the total debt plus accumulated. So not necessarily just the market cap, but still absolutely insane. Very little debt, very, very little debt, because this is the ratio of total long-term debt divided by the total invested capital. And it's small, and that's what you like to see. A little lower of a credit rating, but that is okay too, because I don't know. I'm not sure how much credit ratings are involved with these kind of companies, with these ones that have just been so crazy with astronomical growth. Like we can see if we had invested in this in 2019, we'll just do a point here to current, you would be up 38%. So it hasn't seen the growth that NVIDIA has seen, because NVIDIA has just been going absolutely insane with everything with AI. But NVIDIA, you could say, is probably the best in the market, whereas AMD might trail behind a little bit. And we've kind of seen that, and that's okay. It doesn't mean it's not going to be a good option. But what I am seeing here too, though, is, I don't know how to make these go away. There we go. Is they're speculating, Fast Graphs is speculating that they are going to continue to trend upward. They think it will continue to grow quite nicely. And at least that's what the underlying value is saying. So there is some really good potential. I might do some individual videos on these ones as well. It's hard to get all the information in this and not make the video an hour long. But I am going to talk about all of them because I think they're all really, really cool. But I would probably do AMD over Apple just because a little bit more potential in my opinion and less safety, but I'm a bit higher risk. Now we have Amazon, AMZN. Huge company. Everyone knows Amazon. I feel like everyone loves Amazon. Look at the growth speculation on this one as well. PE is what? A little bit low? No, PE is insane. Yeah, over 100. It's come down quite a bit. I wonder if this is an error. I don't know, but it's come down. We're looking at a PE of 40. Again, if this thing went to 100, I would not be surprised with PE because it's just absolutely insane. Now the price, it's back up to about $200. I made a ton of money on Amazon, and so I do love this stock. I bought it. I think I bought it at 115. I didn't buy the low, but I think I bought it around here on the run back up, and I made a good amount, and I was pumped with it. And I think Amazon's going to continue to trend upward. You're looking. This isn't even like what? Not even a year. Yeah, a little over a year. You're looking at a 37% return, which is crazy. It's absolutely crazy. You're seeing a ton of growth. You're seeing that's annual return actually too, which is it's just crazy. So I think that there is a good amount of potential for Amazon to continue to trend upward. And we're going into the holidays, and I'm not sure again when these are going to be coming out, even if they do come out. But Amazon is a little bit cyclical. But all in all, the growth of Amazon, they might try and break it up. It's like such a monopoly on online sales, but I don't know, Shopify is pretty big too. All things aside, Amazon is one of the companies I hold without a lot of fear because it continues to put out insane numbers and continues to grow. AA debt rating, a little bit more debt than we saw with AMD. The debt to capital ratio is 33% and huge market cap plus some other metrics in there, but over $2 trillion. So plus splits. So we have seen some splits like 2-to-1. They did a 20-to-1 in 2022, which was the most recent, and it was absolutely insane. But still, when they do splits, I like it when they do splits. Gets a lot more people involved, lowers the price of the share a lot. I don't know if they'll do a split anytime soon, and I don't think they necessarily need to. But look at this growth. It's crazy. It's crazy. And I think the speculative growth, I think it will continue to trend upward unless we see a major reversal in the market, which we can't time. But still, I think Amazon is a really solid one and a really good pick for people that are a little less risk, I should say more risk averse, because Amazon's so consistent. Coinbase. This is probably the most speculative, and it's hard for the metrics like with PE to be understood. We just haven't seen this one around as long. For those of you that don't know, Coinbase was a really popular IPO. I invested in initially, like the first couple days, and it went all the way up to 300. I did sell my share. I think I only had one share because I was like so unsure, but I sold it a couple days ago because it is reaching all-time highs, and I'm happy. I'm happy with the return I got. Nothing terrible. I didn't make a killing on it. I just made barely any, and then I actually lost a lot initially, and I just held and held and held. But we can see some absolutely insane return because of this last run. 230% total annual return, which is crazy. There's just total ROR. I'm not even sure what all these metrics even mean. No dividends, of course, but total ROR 800%. But that might seem high. 800% checks out. So just an insane return that we've seen on Coinbase since the lows. This one, again, is going to be a lot more risky. It's even riskier than, I would say, riskier than all the others so far, riskier than AMD. The debt to capital ratio is not bad. USD 61 billion, lower credit rating. We don't care about that as much. It just hasn't been around as much. All in all, this is one for those that love Coinbase and love crypto. The thing that I fear with Coinbase is the cyclical cycle. That was redundant. The cyclical side of Coinbase. You know, when you are doing well with crypto, you're doing well with Coinbase. And when you're doing poorly, you're doing poorly. So, you know, we did see this thing drop incredibly low to $33, and now it's up to $300. You've 10x'd. So I don't love things that are that up and down, but if it is that much volatility and they're able to capitalize on that, you could make some crazy money. But they're even saying, you know, Coinbase, it's looking like it's overpriced according to their value indicator. This is their fair value ratio, and no dividend yield or anything like that. So I think it could be good while crypto is booming. But when crypto's not booming, I think there could be some continual NAV erosion, just depending on how they're able to handle the contracts. I'm trying to move through these quickly. It's hard because there's so much I do want to talk about. But next we have Google, which is Alphabet. And we can see the long-term chart. This thing has just been phenomenal. I wish I had bought in when does it trade back? I wish I had bought in 2004, but I was 7. So I didn't really have that much money then. I might have had more then than I do now, but still. We can actually see it was pretty crazy how this thing was 150, sold all the way off to 92, back up to a new all-time high at 190, and now we're still sitting at 172. So it has come down a little bit. They're still speculating, similar to Amazon, that this is going to continue to go up. USD, they have a smaller TEV is what they call it, which is total enterprise value. Smaller TEV than we've seen, and very, very little debt, which is great. One thing I love as well, companies that don't have a lot of debt in a down market, they'll still do okay. Of course, you're going to have less income, but it's less of a scared kind of thing because you have less debt to worry about. You're not having to make all these payments back to people that you owe money to companies that you owe money to banks, and stuff of that sort. So that makes me happier. I'm going to put Google right there with Amazon. Slow growth, not a lot of implied volatility. The dividends might be 10 to 20%. I don't even know if they'd get up to 20%. Maybe you could, just because the 0 DTE calls can be so lucrative in that way, especially when the market's all over the place. But you're going to, with the market cap of Google and Amazon, you're going to usually have less volatility, unless you're Tesla, which can have a huge $1 trillion market cap and still go 20% in one day, which is just absolutely insane. But we'll get to Tesla. But for Google, I think it's a good continual growth company. I think the weekly ETF would do well. Probably not the most insane dividends, but solid return over time, and only time will tell. I'd probably buy this one though. Meta is an interesting one for me. So social media is huge. It's always going to be huge. I mean, you're watching this on YouTube. I'm recording it for YouTube. So I think that Meta, because its social media side can do so well. My fear with Meta is I think it's targeting now an older generation. I think even older millennials and up are people that are using like Facebook. Instagram is still used a lot, but it's not used as much as TikTok, at least from the younger generations. From my personal experience, I could be wrong. It's not used as much as TikTok or YouTube. YouTube is the biggest, and I think TikTok for younger generations is huge as well. So yeah, I mean, I'm not a big fan of Instagram. I do have an Instagram account if you guys want to go follow it. I post similar stuff, but it's just I just don't love it as much, and that's kind of it. It's not my biggest thing. But we have seen some crazy return from Meta, and I do wish that I had purchased this in 2020. Post-pandemic, it was insane. We saw it drop from almost $400, $20 off 400 to 90, and now we're up over 560. I can't believe I didn't buy this. So it's doing well. I think you're going to have slower growth with this one, but it's probably going to be pretty consistent. You may have some average dividends. I wouldn't say it would be high or low, probably decent dividends and decent returns over time. I mean, it really comes down to how they're going to run these and how these weekly ones pay out and how the overall market does. That's going to be key with these larger companies. If the stock market trends sideways, these will be great. If it goes up a little, these will be great. If it rockets up, these will be good. You might be better holding the underlying fund. If it drops, I think these ones might really struggle. But it also could be a good buying opportunity, not even for the company, but to hold these, accrue some money while your cash is just kind of doing nothing if you've pulled out of other stocks, and then put it back in when you think the market has bottomed or when you're just less afraid. So Meta, for me, not a bad option whatsoever. Probably one that I would buy as well. I can't think of one that I wouldn't buy, to be honest. Coinbase would be the only one that I'm the least happy about, but I'd probably still buy it anyway. Looking at Microsoft, it's hard to think about Microsoft as this huge booming company, in my opinion. Like it did so well. And the thing is, though, is it continues to be almost a monopoly on a lot of products. And I don't think people understand that with Microsoft. Yes, you have things like Microsoft Word and Excel, but you also have like Google Sheets, and there's different competitors. But when it comes down to it, the nitty gritty of it, I work for the state, and with all my work, we all use Microsoft for everything. We use Word docs. We use absolutely everything. We've not changed it whatsoever. And so there is still a lot of use for a lot of things about this company, as well as stuff like the cloud, a lot of things that they have when it comes to computers, everything. I can't think of, I don't think Mac's even close to as popular as Microsoft is for your computer software. Like I just don't even think it's anywhere close. So Windows 10, Windows 20, whatever they're on now, I don't even remember. I think I have Windows 11 on. No, that sounds old. I think they're in the 20s or something now, but still, it's just crazy how you think of computers, you think of Microsoft, and I don't think that's going to go anywhere. But I also don't think they're going to have this groundbreaking, absolutely insane, change anytime soon. They have a $3 trillion market cap, so there's a market cap right up there. Total enterprise value just a little bit over that. 23% debt to capital ratio, which is not bad. That's definitely very, very low, but still a little bit more debt. This one's kind of a meh for me. I don't love it. I don't hate it. Would I buy it? Probably. Is it going to do fine? I would assume so. The dividends might be, again, a little lower on this one compared to some of the other ones because I don't know, but we do see some crazy volatility. The day-to-day volatility is what I'd have to track. But see, it fell all the way from 467 to 406 in that one period where the market was rough. And then now it's trading sideways again. So you're going to get dividends anyway, and price appreciation may follow pretty nicely. All in all, not my favorite, not my least favorite. I'll probably do a ranking video on these sometime soon as well. But I need to know that they're going to actually be a thing first. I'm leaving this one zoomed way out so you can see how insane MSTR has done. This is MicroStrategy Incorporated. I don't even know, to be honest, I know it involves Bitcoin. I don't even know what this company fully does. I have not been up to date with this one, even though it is a YieldMax fund, and the YieldMax fund has absolutely destroyed. Look at the price return. This thing was $14 USD. It's now $400. Total return of 2,880% just since 2022. That kills me a lot inside because I was investing in 2022. I can't say I was too young. I didn't have the money. I was already investing. This one's just been absolutely insane. It's rocketed up. This one is probably, I don't know if I'd say more or less risky than the Coinbase one. It's been doing so unbelievably well. But they do, let's see. So application software is the group. So it's software, but there is a Bitcoin application within this as well. So that's probably why the PE, they don't even have one really on here because the company is just came out of the blue. They could do a split sometime soon. I mean, the price is so high right now. But if we zoom all the way just to the recent, yeah, it's just crazy. Now, the thing with this is, again, you're seeing an insane amount of growth. You could see some crazy fall off as well if this has to do with the Bitcoin run, which it partially does. But this thing was doing well when Bitcoin was trading sideways too. So this is, again, this is one that I would own, but it probably is one of the higher risk ones. I would put it might even be higher risk than the Coinbase one. But still, we have to wait and see how they actually end up trading and if this kind of becomes a thing. We can see market cap of 86.5 billion, credit rating B-. The debt to capital is a bit higher at 53.08%. Still not anything that I'm like, oh, huge red flag. PE doesn't make any sense on this one. They're still trying to calculate it because it doesn't. It just came out of nowhere. And it has continued to run like crazy. I wish I had purchased in on this one. Same thing with NVIDIA, which we'll jump into next. But when it comes to weekly pairs from this, I mean, if it continues this trend, which it has to level out sometime. And I'm not saying it's going to tank, but the growth rate we've seen with this one is just insane. Now, it's not even to $1 trillion in market cap yet, so we could see some more growth quickly between this one, between AI, between everything when it comes to this kind of sector. So it just scares me a lot. I don't like buying things that have run up this much. It does scare me quite a bit, but we'll see. All in due time. I wouldn't not get it. I think the problem too with these is when you have one that's running up so heavily day to day, I'm not sure how it's trading in the aftermarkets, which is important for the zero DTE strategy. So I'd have to do a little more research on this one, but I'm going to wait to do that until it actually comes out. So let's jump back to NVIDIA. When I started making this video, I didn't think I'd get this depressed. I'm depressed. We have seen a return with NVIDIA of 1,900%. It's not even the worst of that we've seen too. I mean, MSTR was even worse. Absolutely insane. The thing with NVIDIA, this one, similar thoughts to MSTR. It has a huge amount of potential with the semiconductors. They're going to keep having that stuff cranked out. The more AI that gets used, the more semiconductors they're going to need. And AI has an insane amount of use. And I feel like we've still barely gotten into what AI can actually do. And I don't even think we're in like an AI hype market anymore. I think we're just kind of like, this is AI. We're understanding what it is and what it can do, and working to utilize it more. Low debt. We see the debt to capital ratio of 13%. We see a market cap of $3.5 trillion and a credit rating of AA-. So very solid, probably a bit safer than MSTR again, but you could see some pullback on the growth. We have seen a couple weeks where it dropped. But it dropped so insignificantly. We saw it drop 20.57% during this time period. The total, this would be if you had this for the full 12 months, not just the time period selected. So yeah, we've seen some insane return, but it did fall off a little bit. Something like that would really, really hurt the dividends, I would imagine, but you might get some better, it would really hurt the NAV erosion, but you could get some crazy dividends during that time to make up for it. We do have to see how they handle stuff like that. But again, this one is crazy overvalued to their fair value ratio, but we're going to see that continuing as a trend for most of the stocks that they're choosing. And there's a reason why they're choosing these ones. They're huge, they're well known, and they would do well. That's the thing. Before I go to our final one, that's the point of this. These are well-known name brand stocks. Investors are pumped. They're hyped about these. There's only a few stocks in the market that everyone knows the ticker to and everyone knows the recent history of, and a lot of these are them. A lot of these, if you asked anybody, if you invested in Meta 10 years ago, if you invested in this, how well do you think you would have done? They'd all say, but you'd have done extremely well. And so that's why they're choosing these, especially these ones, NVIDIA and MSTR, that are recent. It's crazy the return that people have seen and the money that has been made. So, but again, we're dividend investors typically. We're slower growth. We're okay with that. I'm okay with that. I do like having some risk. I'm going to be adding some more risky things to the channel recently, maybe some penny stock information, because there's such good stuff out there. And I like mixing it up a little bit. I got to keep you guys on your toes. With that being said, let's jump to our last one, Tesla. So the reason that I like Tesla, and again, I'd have to see exactly how it works in the weekly function, but Tesla has a crazy climb up with some crazy volatility. You're kind of getting the best of both worlds. If you like the higher risk, this one might be the fund for you, because we've seen Tesla, it's been as high as $400. It's now climbing all the way to $352. I sold my Tesla at like $295, and I am so upset. I made like a couple grand on it, but I didn't want to continue to hold it because I was like, oh, it's going to come back down. When did I even sell? I think I sold at this peak, maybe a little bit above this. And then, it continues to trend upward, but Tesla will come down. And that's the thing. Swing trading Tesla is one of my favorite things to do. And so when it comes back now to the near 200 mark, if it ever does, I mean, it typically has. You can scoop up some shares and do really, really well. And so if you're also making dividends on those shares as well as the price return, I think Tesla is going to be a phenomenal choice for the higher risk investors. Market cap of 1.13 trillion, triple B rating. We see the debt to capital really low at 11.72%. I mean, there's a lot of good that goes into this company, and there's so much potential. We've seen so many things coming out between the Cybertruck, and it's also, I mean, Elon has a number of other companies with, the AI side of things. But Tesla, to me, Tesla screams, I am the future. I don't think there's any, they call it a car company. They call it automobile manufacturing, but I think it's a tech company 1,000%. I think it's a tech company that makes cars. And so they're going to continue to, I mean, just think, I didn't even realize, you guys know you can unlock and use your phone as your car key for Tesla. You don't even have to carry a key around. I don't like carrying keys around. Tesla they're changing. You also don't have to click a button to start the car. You just drive off. You sit in the seat and drive off. Like, there's so much with Tesla that I think has crazy potential that they've already worked in, and I'm excited to see where they go. So Tesla is probably going to be one of my main choices. And like I said, I'm going to continue to swing this one. If it does come back down, I'm okay with that. People are always screaming, oh, Tesla's tanking and saying, I'm like, dude, I'm buying more. That's how I trade Tesla. Tesla's one of the companies I've made the most money on with swing trades because I'm not typically a swing trade investor. I'm a slow growth dividend investor, but sometimes it's too good to be true. Sometimes it's too much fun. I don't like just sitting around watching dividends come in. I like making some crazy trades as well. So that being said, those are all 10 of the new weekly ETFs plus one bonus 20% monthly ETF from RoundHill. These are all RoundHill funds. And again, they're not out yet. It's going to take some time. There was a prospectus that was put out for these. We don't know what's going to happen. Again, some might work, some might not. Who knows? But I'm excited. If any single one of them come out, I'll probably be buying it just for the hype. And I hope you guys have enjoyed this video. Let me know in the comments which one is your favorite, which one you think will do the best, and why. And we can continue to grow and make some money together. Thank you guys for watching. I'll see you in the next video.